Hello traders, you are welcome to this video, and I especially welcome you back to the Forex Geek channel. Okay, in this channel we simplify trading strategies to help you level up your Forex game. Now in this particular video we are going to be diving into one of my favorite techniques. All right, and I believe that this technique is actually a very interesting technique for a lot of traders, and that is none other than the divergence technique, using the RSI to be specific. Okay, you can actually use other momentum indicators like the MACD or any other, like MACD, stochastic oscillation, or any other momentum indicator of your choice. Okay, you can use any of them for divergence trading. All right, but in this video we are going to be using the RSI. Okay, let me just add the RSI to the chart. All right, I actually like, divergence. It's quite a nice trading strategy and it's effective, right? In as much as it does not guarantee profit, but if you've tried out if you have tried out divergence trading before, you'll notice that it's quite effective. Okay, so if you have ever felt overwhelmed by all the noise in the markets, this strategy, the RSI divergence strategy, might just be the game changer that you have been looking for. So you might want to grab your notepad, if you will, and then hit that like button and let us get started. Now, first things first, what is RSI? RSI, or Relative Strength Index, is a momentum oscillator that measures the speed and change of price movements. Okay, as we can see, it ranges from 0 to 100, and most traders use it to spot overbought and oversold conditions. All right, but here's the kicker. The RSI is also an amazing indicator for identifying divergences, which can signal potential reversals in the market. So what exactly is divergence? Now, simply put, divergence occurs when the price action and the RSI indicator are telling two different stories. All right, now let us break it down into two types. We have the bullish divergence and the bearish divergence. Okay, so here's an example of a bullish divergence. Let us look for that example right away. Okay, a bullish divergence actually occurs when price is making lower lows, right, but the RSI is making higher lows. So that is what we call a bullish divergence. Now we have a bullish divergence around here. We can see price clearly making lower lows, but you can see that the RSI was making higher lows. This is a clear bullish divergence. Okay, this suggests that the selling momentum is getting weak. This bullish divergence, now when price is making lower lows but indicator is making higher lows, it indicates that the bearish momentum is getting weak and a reversal to the upside might be around the corner. And as we can see, just shortly afterwards, we actually had that bullish reversal, as you can see. So that's the reason why I said divergence is quite effective. I don't mean to promise any gain because no strategy actually guarantees profit. Okay, so I do not mean to promise any gain because there's no guarantee that even if you are trading only divergence that you're going to be making all the profits in the market. No, there is no guarantee. But you might want to try out divergence if you have not before. You might just want to add it to your trading strategy. Okay, you might want to try it out. All right. Now on the flip side, we have bearish divergence. This is a bullish divergence. Okay, then for a bearish divergence, it is just the opposite. Yeah, that happens when the price is making higher highs but the RSI is making lower highs. Okay, let us see if we can find such example. Let us see if we can find that. When you have the price making higher highs but you have the RSI making lower highs. Okay, I think we have that here. You can see we have higher highs here and right about the same point, right about the same level, we have lower highs. Can you see this? So you can see that shortly afterwards we had the price drop. Can you see? This was a bearish divergence. This is an indication of a bearish divergence, and just shortly after that we had the price drop. Okay, so now that you know the basics, let us talk about the best time frames to use with this strategy. Okay, now RSI divergence works well across multiple time frames. All right, but its effectiveness depends on your trading style. Okay, so for scalpers, the 5-minute or 15-minute chart is ideal. That is if you are a scalper. All right, then for swing traders, on the other hand, the 1 hour time frame or maybe 4 hours or the daily charts can be more reliable for you, okay, for better signals, right? Remember, the larger the time frame, the stronger the signal, okay? Now, here are a few pro tips to supercharge your RSI divergence strategy, okay? 1. Combine with support and resistance. Divergences near key levels of support and resistance are much more reliable, okay? When you find a divergence around a key support or resistance level, the chances of that divergence playing out successfully becomes even higher. All right. So, in as much as it must not necessarily have to be around a support or a key support or resistance level, right? Divergence does not necessarily need to be around a key support or resistance level, but when it does occur around such key levels, the chances of the divergence playing out well are even higher. Okay. And then secondly, you might want to add a confirmation indicator. All right. You can decide to pair the divergence, the RSI, sorry. You can decide to pair the RSI with maybe moving averages or MACD just to confirm your entry. Okay. And then thirdly, set clear stop losses. All right. Always protect your capital by placing a stop loss just below the previous low for bullish setups. All right. So for example, in this bullish setup now, if we had entered a buy, let's say around here, after the divergence had formed, if we had entered a buy around here, this would have been an ideal place to set stop loss below the swing low. Okay. Below the previous low. And then for a sell setup, for example, in this case, just right after the bearish divergence had formed, let's say we had sold around here, above this high, the previous high, would have been a good place to set our stop loss. Okay? And then fourthly, practice patience. Wait for the divergence to fully form before acting. All right? It is better to be late than to be wrong. Okay? It's very important. Now, for take profits, obviously, when you want to take your profits for a sell setup, you can decide to use the RSI to determine your exit signal, okay? So when the RSI gets into the oversold territory, then you can exit your sell, all right? So for example, this place, it just touched the tip, okay? So you could have considered exiting around here, or maybe you would have waited for it to drop deeper into the oversold territory even more before exiting, and that would have been around here. Then as for the buy trade, wait for the price to enter the overbought territory. So you'd have exited somewhere around here as it got into the overbought territory. Okay. So that is it for the RSI divergence strategy. Okay. This is how you can use the RSI divergence strategy to find high probability setups in the Forex market. But remember, no strategy is perfect. Okay. And it is crucial to backtest and practice on a demo account before using it in live markets. So if you enjoyed this video and learned something new, please smash that like button. It really helps the channel grow. And if you're serious about improving your trading skills, hit that subscribe button and turn on notifications so you never miss a new strategy breakdown. Thanks for watching, and as always, trade smart, stay disciplined, and I'll see you in the next video.